We're living through exciting times that are also somewhat strange. It all started off with the Bitcoin Treasury companies headed by Michael Saylor with MicroStrategy, and now one after another we see Ethereum Treasury companies popping up. Those Ethereum Treasury companies are buying ETH at a very rapid rate, thus increasing the Ethereum dominance, increasing Ethereum's relevancy within all of crypto. The question is, why is this happening and how much longer will this continue? Let's have a look at the data. Let's try to figure out where Ethereum is headed from here. Let's try to figure out what's the best risk to reward play right now. Now here's what's going on with the Ethereum Treasury companies and the Ethereum ETF. Initially, there was quite a bit of selling pressure on Ethereum through the Ethereum ETF. And that was due to the Grayscale Ethereum Trust that then got converted into a liquid ETF, where then investors pulled out capital from the market. Then came the heavy acquisition by Ethereum reserve companies, and now 3% of the entire Ethereum supply is already held by those strategic Ethereum reserve companies. Compare this to the ETF, there's a bit more than 5% of the supply held by those entities. Now, very similar to the Bitcoin Treasury companies, we do see a lot of concentration. There are a few players that make up the vast majority of the demand. At number one is BitMine, which is headed by Tom Lee. BitMine used to be a Bitcoin mining company, but now they transitioned to an Ethereum Treasury company that emulates Michael Saylor's strategy for Bitcoin. Now we have to ask ourselves, why did Tom Lee decide to create an Ethereum holding company rather than a Bitcoin holding company? It's probably because it's very hard to beat Michael Saylor at his game, and thus Tom Lee was forced to go one risk level higher. It's a very similar type of thinking that a lot of retail investors have as a bull market progresses, right? First, it's Bitcoin that rallies. And when Bitcoin is already very high, a lot of retail investors think that maybe there's not that much more upside anymore. And so people move to Ethereum. Once Ethereum has rallied, people tend to move into the smaller altcoins. Now the question is, are we going to see a repetition now with those treasury companies? Are we going to see, after Bitcoin treasury companies and Ethereum treasury companies, probably treasury companies for other assets in crypto? But let's not get ahead of ourselves. Let's first have a look at Ethereum. This is the Ethereum dominance. So how much of all of crypto in terms of market cap is in Ethereum? And this bottoms out at roughly 7%. It tops out at roughly 21%. This is a fairly long-term chart. It starts in 2017. And we have anticipated this bottom over here in the middle of April, because Ethereum's dominance was at very similar levels to September of 2019. And I'm publishing videos on Ethereum regularly on this channel. And I encourage you to watch the videos of other influencers around those inflection points, right? So for example, the middle of April, when the current trend suddenly turned around. Did your favorite crypto channel actually talk about a potential turnaround? Because the videos that I published at that time got a lot of attention. And if you bought ETH because of those videos, then feel free to give this video here a like, because it will help support the channel. Now, I discussed the exact same charts at the time, the Ethereum dominance, and we anticipated a decline first with then the potential bounce, which happened exactly here in the middle of April. So feel free to check that video out, right? People are sleeping on Ethereum. If it's of course your first time here on this channel, feel free to subscribe over here. I publish videos on Ethereum, but also on various altcoins regularly on this channel. Now, there's always two components to a rally. There's the technicals, there's the potential levels where price might be very low or very high relative to other assets. But then there's also the fundamental story. And the fundamental story is now the Ethereum treasury companies. But it's always about what's going to happen going forward, not what has happened. And then the question is, how much more potential demand is there for Ethereum? Because there's also a chart that doesn't look as great. This is the Ethereum price just in US dollars. And when we align those bottoms that had been formed in the last 3 years, and we connect this with the recent tops, the current price isn't necessarily that inviting. But then there's the other side of the story, and that's this chart over here. It's Ethereum relative to Bitcoin. And so if Ethereum gets acquired at a similar pace as Bitcoin did, and if the Ethereum treasury companies get the same kind of exposure as the Bitcoin treasury companies did, then there might be more upside, right? Potentially more than a doubling, almost 150% of outperformance versus Ethereum seems to be reasonable. Really, Ethereum has been outperforming everything else, and there is a misconception in the market. Some people think that we are already in an altcoin season because many altcoins went up massively in the last month. But the reason why the altcoins went up is not because there was so much retail demand for those smaller tokens, it's because of the direct coupling with Ethereum. Because here is how altcoins are traded. They are traded in liquidity pools in a pair versus wrapped Ethereum. So the price of an altcoin is not determined in US dollars, it's determined by its ratio in a pool relative to wrapped Ethereum. When Ethereum is going up by 10% in US dollars, then automatically the altcoins also go up by 10% in US dollars. Not a single transaction needs to happen on the blockchain for the altcoin to appreciate, simply because it's the ratio of those two assets in the liquidity pool that determines the price. That's true, of course, for the Ethereum chain, but it's also true for all the layer 2s. Here we've got the base chain, here we've got Arbitrum, here we've got Optimism. It doesn't really matter. Most of those tokens are traded versus wrapped Ethereum. So really, this going green is just a secondary effect from the Ethereum treasury companies buying ETH. And so imagine you're now the CEO of a listed company and you see the success of Michael Saylor, you see the success of Tom Lee. What are you going to do? You probably do not want to compete with Bitmine or Sharplink anymore. There's already more than 8 billion worth of Ethereum held by those companies. But are you going to launch a Floki Ino or a Dogecoin treasury company? Probably not. What we're seeing over here is Ethereum's performance relative to the others market cap. So that's the market cap of the altcoins that are not in the top 10. It's the smaller alts. And while many people think that it's already altcoin season, that's not true. The altcoins are up because of the coupling. Because Ethereum outperformed the altcoins massively, again, since that bounce of Ethereum dominance in the middle of April. This is again a fairly long-term chart. It starts in 2017 and it doesn't necessarily tell too much of a positive story for Ethereum. This is a move to Ethereum, back to the altcoins, back to Ethereum, back to the altcoins. And there is a real case to be made that currently the potential risk versus reward of Ethereum versus the altcoins isn't that great anymore. That maybe it makes sense to get into the altcoins. That's why some people anticipate now the altcoin season, right? The rotation from Bitcoin to Ethereum to the more risk-on assets. But I'm not sure if that's going to happen, if it's really the altcoins that are going to dominate. Because again, the main demand driver currently is the ETFs and the treasury companies. That's true for Bitcoin and it's true for Ethereum. There's simply so much attention on Ethereum right now and there's so much purchases happening through the treasury companies and through the ETFs that probably there will be some kind of rotation out of Ethereum because Ethereum is very heated. But the question is, where is this capital going? It could go back into Bitcoin or it could go one layer up in terms of risk, potentially Solana. This is actually my base case. I do believe that the rotation to Solana will happen and at some point we will see Solana treasury companies. Have a look at the historical Solana dominance. It's currently at 2.8%. Compare this with the Ethereum dominance, which is at 14%. If you're that small company, you don't want to compete with Michael Saylor, you don't want to compete with Tom Lee, you want to compete on an asset that's even smaller. Bitcoin's market cap is roughly 5 times the market cap of Ethereum. Now, Ethereum's market cap is roughly 5 times the market cap of Solana. So this could be the logical conclusion, the next step. Ethereum outperformed Bitcoin by more than 100%. Through the establishment of the strategic Ethereum reserve by many companies. And I don't think it's unreasonable at all to see a 100% outperformance of Solana versus Ethereum in the not so distant future. We have already been at those price levels before. And so I don't think it's a matter of whether or not this will happen. I rather think it's a matter of when will this happen. So what's the perfect market timing? If you just look at the chart, it seems like we are already comparatively low. But of course, nobody can predict the future. We try to buy what is cheap. We try to sell what is expensive. And while Ethereum still might have some more upside potential relative relative to the rest of crypto. It's not yet at historical heights. There are definitely first warning signs. This again, the chart being in US dollars. And this being the chart of Ethereum's market cap relative to the altcoins. Solana relative to Bitcoin might have even more upside than Ethereum has. Now, don't understand me wrong. I benefited from this Ethereum rally a lot as well. I'm just talking in terms of opportunity costs. I do believe that Ethereum will hit new all-time highs in US dollars very soon. But I do not believe that Ethereum is currently the best bet if we just look forward in the future for the next few months. I do think that Solana is the better bet. Again, because there might be Solana Treasury companies coming very soon. It's just a natural progression in the market. I don't think something fundamentally has to shift for capital to get into Solana again. Now, what we're seeing over here, that's the others dominance. So how much of all of crypto is currently in the altcoins that are not in the top 10? And that's currently close to 8%. And since the beginning of 2022, this is actually going down. And there's a fundamental reason for the altcoins to perform that poorly. And by the way, I expect this to continue to go this way. What we're seeing is a concentration of capital in the heavyweights. So in Bitcoin, Ethereum, and Solana, due to the ETFs and due to the treasury companies. Here's a chart you've probably never seen before. This is the Bitcoin market cap plus the Ethereum market cap plus the Solana market cap relative to the market cap of the smaller altcoins. So when we look at the top 3 cryptocurrencies and we compare them to the smaller altcoins, we can see a clear trend. The big, potentially less risky cryptocurrencies outperformed the risk on assets, the small micro caps, by more than 200%. And for some specific cryptocurrencies, that outperformance is even more pronounced. This here is Balancer relative to Bitcoin plus Ethereum plus Solana. So when we just look at the last 2 years, this outperformed by more than 1,200%. And that's no coincidence. This happens because of fundamental reasons. It's because in this case, the Balancer supply, the supply of the BAL token, went up massively because of token emissions, because of usage of the platform. So platform usage gets incentivized by an expanding supply, and that expansion in supply cannot keep up with the demand, thus the underperformance. Thus, all those bigger cryptocurrencies, Bitcoin, Ethereum, and Solana, did so much better. And so this is just an example of how the mechanics in crypto work, right? Have a look at this again. This is the Balancer supply. It keeps on growing because of liquidity mining, and those mined BAL tokens get sold over time. And we've got these effects regularly in crypto. There's an entire website called Tokenomics.ai that's just focusing on the token emissions of various altcoins. Every single week, we see roughly 800 million worth of tokens hitting the market. And the problem is that all of that supply has to get absorbed by the retail investor. And it has to get absorbed faster than the purchasing rate that we see through the ETFs and through the treasury companies of those larger caps. And long term, that's very unlikely going to happen. The issuing rate is just too high. And that's just of the tracked tokens on this website. And so I'm trying to make money where there are market inefficiencies. And I do believe that the altcoins are still inefficiently priced in the way that there's way more selling pressure than there is demand. 800 million is way too much. If the altcoin market suddenly drops by 50%, then this will only be 400 million. And that could get absorbed a bit better. But right now, I really don't see the case how the altcoins can outperform the major cryptocurrencies. There won't be a treasury company for Floki anytime soon. And so the way I make money with those inefficiencies is by betting on rising prices of Bitcoin, Ethereum, and Solana. And at the same time, I bet on falling prices of all of the crappy altcoins. The altcoins that have a very quickly expanding supply that tend to underperform the major cryptocurrencies constantly. I followed this strategy now for roughly 4 years. So this is my personal performance. It's a monthly chart I've pulled out of Microsoft Excel. And had I just just dollar cost average into Bitcoin, I would have gotten this light gray return over here. Instead, because I also bet on falling prices of various altcoins, I got the return here in black. I did this mainly with borrowing and lending platforms like Aave, etc. But I recently switched over to perpetual futures, and that also worked pretty well. So I did this here with my personal capital as a first pilot project and turned roughly 40k into 60k in just 2.5 months. And this is where I think I differentiate myself with this channel from all the other crypto channels. Most other crypto channels are not willing to share their actual performance. But I didn't want to stop there, right? If I make money, how can you make money with the same strategy? It's not always that straightforward. So I opened a capital pool 1 month ago. And lo and behold, this pool is also appreciating quite quickly. Not as quickly as the initial test. So annualized, this gives us 61%. But still, the premium members of this channel that are invested in this pool are currently making exactly this return. Now, because there was so much demand for this capital pool, I had to close deposits. So I will continue trading with that pool until end of the year and then open another one at the beginning of next year. But until then, you can still copy my trades. So I share every single trade that I make over here in the Gerhard's trade channel. So for example, over here, I'm not sharing now the recent trades, but here on the 23rd of July, I bet on falling prices of WorldCoin, and various members copy traded and made some money as well. And so I was thinking, how can I set up this membership in a way that it's as risk-free as possible for you? And I came up with the following. If you decide to join the membership here, you just have to watch 2 videos. The first one is this one here, using perpetual futures on Hyperliquid to bet on relative valuations. The second video is over here, risk management with relative valuation bets. So that's roughly 1 hour of content. You're simply just following the instructions explained in those 2 videos. Afterwards, you're joining all the premium groups. Then I get a notification and then I will send to you the one trade that you just have to copy trade, that I have the most conviction in. If with that trade you are not making money after the first month of your membership, then I will refund the entire membership fee to you. So this is the trade that I will share with you. It's not the balancer trade, it's something else. It's something that has more upside potential. And since beginning of the year, it went up by 350%. And yes, there is some potential risk for me that you might not end up making money in the span of a month. But I think the risk is manageable, especially given that the performance recently is accelerating again. And the reason for this outperformance is the exact same as for Balancer. It's an expanding token supply, and the major cryptocurrencies just outperform this asset. And they do this long term because all of that supply, that additional issued supply, hits the market, putting constant selling pressure on the asset. So if we make the relative valuation trade, we can get this performance relatively constantly. And so here's the price for a month. It's currently $125 US. Again, if you don't make any money in your first month with that trade that I'm sharing with you after you join, you will get that money back. Just message me and I will just refund you, no questions asked. If you want to become part of the next copy trading capital pool, then you might consider joining for the annual membership as well. This is where I share the automated copy trading first. So besides that early access to copy trading, you of course also save some money, $250 per year. If it's your first time here on this channel, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!